Okay, everyone, let's get today's show started. Friday, the 11th of September, a very interesting day when you consider the 9/11 events in the United States, a very sobering day for the world. Twin Towers and those terrorist attacks on the United States. Today is the anniversary of that. It's been a different world since then. Of course, we have another major global problem on our hands, and that's the virus pandemic. Let me welcome Ali Kansachu, who is the CEO of Rich Frontiers Management and founder. Thank you so much, Ali, for making time to be on the program.
It's a pleasure to be with you, Barson.
Thank you. Joshua Debisi is a banking analyst with Betiva Capital Management. Good morning, Joshua.
Good morning, Barson.
So when you think back about 9/11 events in the U.S. back then with the terror attacks, what comes to your mind on this day of an anniversary of it?
You know, Barson, I was at the trading desk in London that day. I was working at Dresdner Kleinwort Wasserstein, and I remember watching the television screen and seeing that first aeroplane hit the building. And I can remember, as if it was yesterday, the reaction of everybody on the floor, the sense that what is really happening. And there was this interregnum moment when no one really knew. And then I think the second plane hits, and by that stage, we knew that it was something very, very dramatic. So I remember it like it was yesterday. I think it changed the world, Barson, in so many ways, particularly in the Western world, the response to terror, the concept of terror, the wars in Afghanistan, the wars in Iraq. And we really haven't recovered from that moment as a world, I don't think. And it's pretty unforgettable. For me, the more important thing in the US today is not Islamic terrorism. It is actually a different domestic terrorism that has been ignited by this very heated environment in which the US finds itself under President Trump.
Quite a thoughtful reminders and remembrance there for you. Joshua, what's your take on this day, 9/11?
Well, Boston, I'm a lot younger, but I can still very clearly remember the day it happened. I remember where I was. I was in my house in Kaduna at the time. And I didn't fully grasp the impact, or, I didn't really understand the world before 9/11, but I've definitely grown up in, the world post 9/11. So that is the only reality which I am aware of. So when I think about it, a lot of things changed after that day, obviously. Paranoia became the norm in certain areas, and definitely the way we perceive each other on a global scale changed. And I know the narratives changed, but I'm hopeful that, as we get more distance from it, we take the right lessons from what happened and the reasons why it happened. And we start to understand that empathy is always important. Greed, I believe that greed is the underlying cause of most of the things that we've seen or we saw leading up to that moment and have seen since. And I feel like we need a little bit more empathy in this world.
Great. Thank you very much. We will talk about the markets very quickly. Let's bring in the Nigerian market. We're sticking with that 9/11 story a little bit for certain reasons. But let's show you how we finished off yesterday, Thursday on Nigerian market, and the other four markets that were covered. We saw the first green shoots on the Nigerian bus on Thursday, just a very gentle push. But again, it's a good way for the week, 0.38%. It was all green. Ivorian market was stronger, 0.55%. Egypt was a roaring 1.29%. About 8 major listed companies in financial services, cement makers, ceramic, pushed the Egyptian top 30 index up. In Kenya, the banks gave a very good account of themselves, as well as Safaricom pushing the Nairobi all-share index to 2.09%. South Africa, 1.35%. The financials, the gold mining, the resources, and industrials all in positive territory. So across Frontier Africa, Thursday, was a very good shoot. But let's talk about this, Ali, a little bit further. When we look at since 9/11, we're talking about the insurgents, look at the threats to the LNG project in Mozambique, look at Nigeria and the Horn of Africa, and the military takeover in Mali recently. So when we put all of this together, some of the unfinished pocket of civil issues in Burundi and all of that, what does that tell you about the world since then, and how difficult economic development, social development projects are very difficult to deliver? Look at how it's impacting Nigeria food security because farmers are off their farms.
That's a fascinating question and a very deep one. Let me try and give you some kind of answer. I think if we look across the continent, it's interesting that you see things like the number of coups has come down. Mali was an exception to the general trend, which has been lower. But if you look at insurgency action, if you look at ungoverned spaces, you have those in Nigeria with Boko Haram. We have that increasing in Mozambique, large parts of the Sahel, Libya post-Gaddafi. If you look at the continent as a whole, you know, the underlying story has been one until recently, 3 or 4 years back, of increasing growth, a much better story. But at the same time, what we can see is a parallel narrative where we have not had the rule of law, where countries have not been able to apply the rule of law and provide growth to their citizens. So I'm worried because in the context of the economics outlook now, which looks extremely poor, and I think, you know, we have to now look at that for what it is. And I think Africa is really in the crossfire of the fallout of the post-COVID world. It alarms me considerably. It really does. And I think it's, you know, our leaders, our policymakers, as far as I can see, Barcelona, and I don't mean to be rude, I really don't think they get it. And I don't think they're capable of doing anything about it. And that worries me more than anything.
The reactions of policymakers and fiscal authorities and political leaders, very, very important how the handling of things. Joshua, when you talk about food insecurity in Nigeria today, we're wrangling over the central bank allowing about 4 companies to import some food into the country over just a 3-month period. But look at the last 10 years or going to 12 years now since the Boko Haram. Then we have the insurgency, we have the violence, extreme violence in the food basket area of the Middle Belt. Do you think that we're now beginning to see the result of these years behind us in which it's becoming extremely difficult for farmers, for herders, even to build infrastructure and for other businesses?
Well, I mean, just based off, first of all, I'd like to, you know, contextualize something. So the way we've approached food security in Nigeria, I think is so misguided for the simple fact that, you know, any economist will tell you, or at least most economists will tell you that you can't achieve your goal of, you know, food for everybody and cheap food for that matter through protectionist policies and through, you know, just misguided subsidy policies. Overall, I think what we've seen is an over-reliance on specific government initiatives. I mean, the fact that the CBN is actively, you know, participating in the production of food tells you something has gone very, very wrong. You know, this should be a free market. I know that, you know, it has come to the point where we are over-reliant on imports. But unfortunately, that's just based on the reality of, you know, what is on ground. The quality of production in Nigeria has not been great, has never been great, you know, and that comes down to the fact that outside of, you know, the production of raw materials, we don't add any value to the things that we produce. You know, manufacturing is practically non-existent. So if you're going to then force the Nigerian people to, you know, invest more in local production, then we're just going to continue producing more, raw materials, which will not be processed, which will not then be, used to generate some sort of value or generate some sort of wealth and bring in effects that can then be used for other things or to import goods. We don't produce everything in Nigeria. We produce a lot, but we don't produce everything. So things need to be imported from other places.
We don't produce from end to end.
Yes. So things will have to be imported. Things will have to be imported for now. So the truth is the government, continuing to throttle supply of FX for importation does not help anybody. Now they're saying they don't want to, even supply FX for the importation of fertilizer, when I know for a fact that the local produced fertilizer is not anywhere near the standard required to produce at a, suitable level. We have an issue with the yield per square meter of our crops. We're not producing anywhere near the levels we should be producing at to feed ourselves and export. If we really wanted to do that, we would focus on making our farming methods more efficient, educating farmers, upscaling farmers to the point where they can then go about producing enough to feed themselves, feed their communities and export. And we as an entire country will be better off for it. But just the banning of things willy-nilly is coming at it from the wrong end. We need to go to the other side and actually improve our production, not send more people out into the farms. That's misguided. Telling Nigerian youth to go to pick up hoes and cutlasses and go to the farms. We're not in the 19th century. Farming has moved beyond that. Countries like the Netherlands, with their tiny population and their tiny land mass, are producing more food per square meter than any other country. That's because they have pioneered cutting-edge technologies that allow them to produce vertically rather than horizontally. Why aren't we going to them and asking them to come to our country where we have all the land, all the soil, all the labor, and set up production and actually build from there? Why aren't we asking for their help? Why are we just banning things left and right? It doesn't make sense to me. So I think we're coming at it from the wrong angle. And until we really evaluate our position and stop lying to ourselves, then nothing is going to change.
I appreciate that point about focusing all the time on one policy approach. And that is a big, I think that is where justice is. It looks like the government now feels that, well, if the central bank has some money, give it to some farmers through NASA, whatever, then we've got a problem fixed. So the Ministry of Agriculture and the agencies there practically went to sleep and then just leave the central bank to lead from the front. Central bank can never, ever in any country lead agriculture, food security from the front. It's never done anyway. We need to rethink a whole lot of things. Thank you, Joshua. Ali, you want to give about 1 minute or 30 seconds on Nigeria's situation, what you heard from Joshua?
I thought Joshua's was very powerful diagnosis of the problem in Nigeria and frankly in Africa. And, the central bank, its skill is in monetary policy. It's not in farming. And if you're telling me that they have any special skill in understanding the agricultural sector, then we are smoking some very good stuff. Frankly, they should be concentrating on the monetary policy operations and the financial side of the economy. I absolutely agree with Joshua. It's not even rocket science what Joshua is mentioning. We know that fertilizer can have up to a 3x improvement in underlying production. We've seen it happen in other countries. Take Malawi a few years ago where they catalyzed a huge surge in production. But if you're not allowing FX to bring in fertilizer because you've got a natural shortfall, you're effectively not allowing yourself to achieve what your outcome should be. So I thought it was a very powerful intervention by Joshua. And, it confuses me that we're still having these discussions in the year 2020. I mean, where are we going?
Mm-hmm. But Nigeria does not have this FX. That's where the problem is.
So you can basically say to yourself that specifically, if we bring in fertilizer, we know we're going to get a 3x better outcome. Therefore, in the context of strained FX, it makes sense to allow us to bring in fertilizer at this point in time, whilst we work out a medium-term production operation for fertilizer. Most of the fertilizer comes out of gas. I mean, this is not difficult to work out and then arrange an investment which catalyzes fertilizer production. So in the short term, you've got to allocate your FX effectively, the little that you have. But at the same time, the bigger problem for me for Nigeria is the same one. You don't have an FX level that people feel confident in. Until they're confident about the level, they're not going to bring in a lot of cash. This is what Al-Sisi learned, and he's reaping the reward for that. He let it go, overshoots, everyone piles in, they all come back again. But until you create that catalyst, you're not going to get the money coming in, as you were discussing with me prior to our conversation yesterday.
Very sobering. Let's talk about let's talk about East African markets very quickly and get on with a bit of this for today. A very interesting conversations around where we are right now. Very interesting story when President Kenyatta says no to former parliamentarians who are asking for 100,000 Kenya shillings monthly pay. And we talked about the GDP revision yesterday. Tulu Oil says is suspending plans to exit Kenya. The question is, why were they planning to leave in the first place? And Equity Group resists loan provisioning for the bank to 8 billion shillings. And Rwanda inflation eases to 8.8% in August from 9.2% in July. Food inflation also slows down to 11.1%. Ali, give us a minute here on the East Coast.
So, I mean, first point to note is obviously there's been some kind of high-level asset allocation over the last 48 hours into African equity markets. That's why you saw a sea of green pretty much across the board. I thought that was an interesting development. I think Nairobi benefited from that spillover yesterday. The IMF forecast, they went from negative -1 to plus about 1%. I saw that the cabinet secretary is talking about less than 2.5%. A lot of this positive movement is around the agricultural sector, which is Kenya's strength, which has been largely ignored and underinvested in. But in this environment, and you know, from South Africa, which the only positive component was agriculture, United Kingdom, where I am now, the best performing segment of the economy is agriculture again. So really agriculture is, I think, the theme of the COVID economy across the world, and that's supported the issue here in Kenya. But the problem is debt, and this debt problem is not going away, whether it's in Lagos or Nairobi. And I still don't see a proper plan. It feels like to me everyone's throwing Hail Mary passes and hoping for the best, and it's going to come unstuck. President Kenyatta saying no to 100,000 monthly pay for ex-MPs. There's no money in the kitty. He hasn't got a choice. Tullow Oil suspends plan to exit Kenya. This Tullow Oil project is dead in the water, in my view. Oil prices now are unlikely to substantively recover in the medium term. I mean, we're not going back to a world where we're all flying around every single day for business meetings and what have you. The world has systematically changed, and therefore oil demand has to adjust to that. And therefore these marginal fringe projects like Lake Turkana are not coming on stream as far as I'm concerned. But I think it's a political issue. Tullow Oil don't want to upset the Kenyan government, and the Kenyan government doesn't want to give up on its oil dream, but give up it will. Equity Group raising provisioning 8 billion in first half. Look, this is a story across the banking sector in Kenya, East Africa, and no doubt in Nigeria as well. Equity Bank is probably the best, highest growth model in the region, doing extremely well in the Congo. But, Dr. Mwangi turned cautious 3 years ago, actually. I have to give him credit for that. And, I think he's amply provisioned, amply capitalized. And when it turns, he's going to capture the opportunity of that, I have no doubt. Rwanda inflation, probably highest of what we're seeing of late, 8.8% year on year. That's all about the fact that it's landlocked, and the various lockdowns created problems about provisioning the country out of East Africa. So I think that's more a logistical problem, which will always happen in Rwanda's case.
Good. Thank you, Ali. Joshua, this morning, Afrexim Bank announced a $200 million funding facility to Zenith Bank to help the bank continue COVID-19 lending. That came in just a few minutes ago. That's in the news. But again, when you look at the broader Nigerian news, Sobana, we saw the precedent around the FX and the protection of local farmers and fertilizers producers. We just talked about that. Then MSME Survivor Fund. The president spoke at the food security yesterday. NNPC says it's shutting down 4 refineries over pipelines damage and all of that. So, but let's just talk about the Afrexim Bank facility to Zenith Bank. This is a very good show of confidence in the bank.
Well, to some extent, yes, absolutely. The truth is, when you think about it, Zenith Bank has done well in light of the COVID-19 pandemic, and I think Afrexim Bank can take confidence from the fact that the bank is not in any dire trouble, even though the level of provisioning has gone up by about, if I recall correctly, over 100%. But the truth is, this $200 million is for some very specific interventions related to the COVID-19 pandemic. So it will help the bank to give more lending to, the medical field in general. Now, I'll be very interested to know exactly how that money comes into the country, because as we know, we're very short of FX at the moment. So I don't know if Zenith Bank will be too keen to get all that cash in and then convert it to Naira, because it might be a bit difficult to then exit that position later on. But at the same time, economically, Afrexim Bank, the AFDB, all these banks will continue to intervene across the continent, especially in Nigeria. But I think from the figures we've been seeing, the COVID-19 pandemic appears to be sort of leveling out. The number of cases has dropped across board, across all the states. So I think we can be hopeful at least that going forward, even without the development of a vaccine, hopefully the spread should not be too dramatic, and we should be able to sort of resume something akin to a normal working life, obviously the new normal. But yeah, overall, I think they call it the Trade Impact Mitigation Facility. So it's more just to, ensure that, some very essential businesses are able to continue to operate and able to continue to add value to the economy at this very critical moment.
Yeah, we appreciate that. Let's look at the Southern African space just for a minute very quickly and look at the rundown of the top stories with the manufacturing output data, the current account deficit in Q2, 2.4% of GDP. Moody's weighed on South Africa, says the downturn will intensify the fiscal woes. Outlook is about debt to GDP could hit about 80% by year end, and Moody's is warning strongly. FirstRand reported a 38% drop in profits, headline earnings per share, 308.9 cents. And local flights have resumed in Zimbabwe. Ivali is flying in there. Now you can, but the international flights will have to be until October, so you got a couple of more weeks to wait. Ali.
Yes, so I think, Zimbabwe obviously needs to open up as quickly as possible. The tourism sector it will provide, hopefully, some valuable foreign exchange, something they're in dire need of. South Africa, the trend line of debt to GDP is being intensified by this downturn. We've had 4 consecutive quarters of negative growth. We had this brutal quarter in the last quarter of over 50% a downturn. And to date, I don't see where we're going to see the improvement start from. Projections I'm seeing a debt to GDP of 120% by 2025. And the question is, how do you go? You're going from 80 to 120. How are you going to improve that? There's a lot of potential in that economy. And just to touch on the fact, all these negative numbers, the only positive sector was agriculture, which grew around 2%. And, they are a very strong agri-economy. I know in Nairobi we consume their oranges, all their juices, and, they have great products. I think South Africa has to look towards that sector. But overall, I think my takeaway is, we're deep in this downturn, and, I just don't know where the silver bullet is coming from. First Rand was pretty bearish in the accompanying commentary to those results, and saying that they were provisioning quite aggressively, not as aggressively as ABSA, which provisioned the most aggressive of all Sub-Saharan African banks.
All right, let's round off on the North African space. Turkey says it's in talks to dig for oil in Libya. That's a very interesting story. Oil and gas in Libya. Well, the Egyptians are next door, by the way. So let's see how that goes. Going into that. Egypt is launching new polymer banknotes next year. Well, great. But the EIB, that's the European Investment Bank, is giving President Sisi 120 million euros to keep shoring up the economy. Inflation data from Egypt also coming nicely down from 4.2% to 3.4%. Joshua, what's your take on these inflation figures we saw from Rwanda, from Egypt, from Ghana and Rwanda, seeing inflation trending lower, especially food inflation also declining? What are we missing here?
What are we missing?
In Nigeria.
I mean, we just have to look at the contrast between our policy direction and theirs. You mentioned Egypt. As Ali has already mentioned, they did the right thing. They did it early. They did it, since back the first crisis. And they're reaping the benefits, and they're still going to reap the benefits. Meanwhile, we have continued to go in the wrong direction due to some misguided, I don't even want to call it economic, policy, because it's really not, it's anti-economic, to say the least, Obviously, as an economist, I will always advocate for free markets, open markets, let things fall where they may. But the truth is, that is the general consensus worldwide. So as long as global investors are skeptical, we're going to continue to see a shortfall in FX. And as long as we're seeing a shortfall in FX and all prices are low and our refineries aren't working and, fuel is high, all the inflation is going to be up. Food inflation, before you transport your food from the food basket down to Lagos or anywhere else, the cost of transportation is ridiculous because we don't have working rail, we don't have cheap transportation. So of course, the food prices are going to go up. We're seeing flooding, insurgency, all these things are going to affect production. So overall, we're missing a lot of things on an economic part, on a security front. It's just, the problems are too many to list.
The problems are too many. Let's just hope we're able to get to walk our way out of the waddle, as it were. Ali, your final word.
No, I think, we find ourselves in a very difficult situation. I would say, like what Joshua was saying, in Nigeria's case, it's all about that foreign exchange rate. You've got to ditch that policy. You've got so much potential, but it starts with having a normalized foreign exchange policy, and everything will flow from that point. Because at the moment, which foreign investor wants to come into an economy and know that at some point they might take a 20% haircut on any investment they make? If that's not a red flag, then nothing else is. So I would say in Nigeria's case, that's what we've got to look at. We're also seeing a lot of pressure build in other parts of Africa. I don't know if you saw, Sudan has now introduced a state of emergency. FX is collapsing there. We've seen that in Zimbabwe already. We know where this story ends. The question is, do our policymakers have the wherewithal in some countries to stop it before it gets to that point? That's my concern.
You know, we know how the story ends. Let's end it there for today. Thank you so much. Alec Ansachi from Rich Frontiers Management and Joshua Odebisi from Vertebra Capital Management. Very insightful conversation with you both today. Thank you so much. Have a great weekend and see you next time.